Joining us now is Buck Horn, Raymond James analyst. Buck, great to have you with us. You've got three major concerns that you're hearing from investors, like the impact of a spike in mortgage rates, the shortage of materials, as well as whether or not the suburban boom will continue. What is the biggest, most impactful concern that you have in the space?
The concern I have is really just how, we think it's actually going to be a very prolonged and multi-year cycle that we're seeing. So a lot of these challenges are really just near-term speed bumps, whether that's the lumber issues and lumber pricing, shortages in the supply chain. And really, I guess the biggest concern is maintaining an adequate supply of finished developed lots in front of the home builders. So we've continued to see a lot of builders meter out the sales. They're holding back the sales pace at these levels because they're running out of finished lots, and they have to get the approvals and the entitlements and the infrastructure in place. So the land is really probably the biggest limiting factor in the equation right now. I think more land is getting developed. It's going full speed ahead, but it's going to be hard to really materially increase the rate of single-family starts or new home sales much further without a lot more land being developed. So the whole supply chain is reordering itself and trying to ramp up to a higher level of production capacity, but it's going to take a little time to get there.
How much incremental demand did the suburban flight create? I'm trying to figure out if that reverses because of this reopening, which looks like it could be gaining speed, the reopening, because of all the lifting of the mask mandates, et cetera, that we just heard about. What does the landscape look like in terms of the supply-demand dynamic?
It has been a remarkable phenomenon, this population realignment throughout the country. The relocation buyer into Sunbelt markets, into the southwestern United States, and into other more inland areas, more affordable markets, has continued at just almost a record pace. And it's happened even with the idea of a reopening and vaccines on the horizon. It has not abated one bit. So even with this, back to normal, if you will, I think that does reopen some optimism for the cities, but people are voting with their feet. They're making lifestyle decisions on a more permanent basis. I think it's got lasting implications. I think it's part of a secular shift towards more affordable markets, towards better weather markets. People are taking stock of their lifestyle, how they want to live, where they want to live, and they're choosing to move away from higher cost, high tax, maybe tougher weather environments and looking for a more affordable and more beneficial lifestyle. So I think it continues.
Any chance that this CDC news actually makes things even tighter? Was there any sense that people were holding back from really going out? I know the market was hot and physically looking at homes before, and maybe that'll be more common now?
There was some of that, but I think for the most part, buyers had adjusted to shopping online. There's a lot more familiarity with the technology and going out and shopping online. So I'm not sure that it's going to change much, quite frankly. I think there's still a huge incentive for buyers to migrate into single-family homes. We're seeing that overwhelming demand. So maybe it makes it a little bit easier to walk into a community, into a model home, and pick out the carpet and the flooring you like. But probably very, very nominally on the margin does it change how strong the demand has been.
Shepard Smith here. Thanks for watching CNBC on YouTube.